Hey folks, Dan Frio here, the rate update, and today is September 14th, 2020, and I hope you like I'll try to zoom back there. Pigs get fat, hogs get slaughtered shirts are in. Find out at the end of the video how you can get your own, and I'll ship them out to you ASAP. So I'm going to come out on Tuesdays, and anybody that comments and subscribes, if you already subscribed, you just need to leave a comment. At on Fridays, I'm going to do drawings every Friday and send out a new t-shirt to you. So if you comment, please follow the channel so you find out on Fridays if you want a t-shirt or not. But they're pretty cool. Pigs get fat, hogs get slaughtered. What happened today? We'll be right back, and I'm going to explain to you what happened. So don't go away. We'll be right back. Okay, so what happened today? I'm going to read off my prompter down here because I took a bunch of notes. I'm going to go through rates in a second. We took a hit today, and I got caution out there for everybody that's looking to refinance within the next couple months. Don't prolong it. I'm going to tell you why here in a minute. But I just want to go over a couple sections, comments that I do have, just to kind of appease some of these areas. One of the things is I see a lot of clickbait saying, home prices are going to, just plummet, crash, do whatever. Guys, just so you know, the last time home prices just crushed or crashed, I put it that way, is during 2007, 8, 9, 10-ish. There was a reason for it. People were buying homes that had no reason to buy homes because there were a bunch of I'll just say it, there were stupid programs out there. The lenders are making more money than they have ever made in their lives. I knew people making millions of dollars a year that, had a tough time putting an application in, and they were loan advisors, I'll say it that way. So no disrespect to anybody, but there was a lot of people making a lot of money that didn't have a clue what they were doing. A lot of people were buying homes that had no really, maybe I'll say it this way, they could have bought a house, but not as big as they wanted to. But there was programs that put them into those things. And then when all these teaser programs like interest onlys and option arms and all this stuff blew up, everybody's sitting there saying, I can't afford that payment. I'm making $50,000. I have a $750,000 home. Guys, the math doesn't add up. So if that was you, my apologies. I'm not trying to disrespect you, but there was just a bunch of dumb programs out there. Here's why I don't think we're going to have a crash, and I'll get on to rates here in a minute, is inventory is way down. There's not a ton of properties on the market. Demand is way up. So if you have limited supply, big demand, it's causing prices to go up. I don't see, with the programs out there today, I don't see anything, there's no bad loans being made. Everybody that qualifies now truly qualifies. And they have skin in the game, meaning they have money as a down payment. That's one on the housing front. Debt, I'm going to talk about why you should basically contemplate refinancing. I get a lot of calls. People don't realize they can refinance and pay off bills. There's $14 trillion of debt out there to homeowners or consumers, and there's $10 trillion in equity in your home. Okay, the first thing you might say is, oh, Dan, I don't want to put all this debt, I don't want to go into debt on my home. Well, let me rephrase this. I'm not putting you in any more debt. I want to help you restructure that debt. So do you pay an interest rate that's 10, 15, 20, 25% on a credit card? Or do you bring that into a mortgage at, say between 3 and 4%. It doesn't take a mathematician to figure that out. So I'm not putting you in any more debt. I'm helping you restructure your debt to make it financially a better financial position for you. Okay, so that's the first thing. So if you have a bunch of debt, student loans, car loans, credit card debt, all this other stuff, and you have a house and you have some equity, you can refinance and consolidate all this. I have a couple people that I'm working with right now in consolidation loans. I have more than a couple, but they stand out because one gentleman's saving $1,100 a month, $1,100. So you know what I told him on that? I said, and you're going to excuse my French on this one, send in an extra $500 on your mortgage so you can pay it off in probably half the time you would pay off on it now. And the other $500, just piss it away. Just go out to dinner every week. Do this. Buy a new car. I don't know what to tell you. That's probably not the greatest idea there. And sorry about the verbiage I got, but kids aren't probably watching this anyways. So on that front is, look at trying to refinance your home and maybe consolidate some debt. It probably makes sense to you or for you. Rates, interest rates. We're going to go over those in a second. But as of December 1st, Fannie Mae and Freddie Mac are implementing a 0.5 point hit for refinance loans. 0.5 point. Meaning our average loan right now is $285,000. 0.5 point. That would cost you $1,425. That's a fee. It's not a lender fee. It's not from me. It doesn't matter who you go to. You can go to me, Quicken, Wells Fargo, Guaranteed Rate, Rocket Mortgage, whomever. It's getting hit, and it's getting implemented by Fannie Mae and Freddie Mac. So if you're looking to refinance, don't put it off because it could cost you an extra $1,000 if you put it off for another month or two. That's that. The Fed's meeting this week. And as the week progresses, I'll give you the data that's coming out from the Fed in regards to that. So let's get to it. What's happening today in rates? Okay, here we are. We're at the mortgage-backed securities market. Why do we follow this? Dan, what's this number? I saw you're getting, you're almost at 10,000 subscribers. You're getting a ton of views. What are people watching you for? What is it? I could really care, rates, MBSs, all these charts. I don't know what you're getting at. Okay, let me explain. This right here is what's happening to the price of the mortgage-backed security bond throughout today. Okay, think of it as kind of like a stock ticker. It's going up and down. This is the price of that bond. All right. The best way for me to explain it to you is I always say this: red is bad. What red does, it means the price of a bond is going down. Thus, interest rates are going up. So red is bad. Green is good. Means the price of the bond is going up, driving down the yield. The best way for me to explain it is that there's an inverse relationship. As this goes down, rates go up. As this goes up, rates go down. And I have other ways of explaining it, but I won't go through it here because I want to get you on and off here within 10 minutes so I don't lose your attention span. So 12 down isn't a good day. Don't like today. But there was something that I was monitoring at the beginning of the day, and this was intriguing. Right through here. So I'm going to explain this to you. This is what's happened with mortgage-backed security prices over the last quarter, okay? Again, as these go up, that means rates are coming down. So we like this. Then they came down here and so forth. But the intriguing part is I'm going to give you some of these lines and what they mean, what they're called, what they do. This line here, the top line there, this line here, and this line down here, these are called what we call Fibonacci levels, short-term and long-term. So over the long term, this is the ceiling, this is the floor. Over a more condensed period, this is the ceiling, this is the floor. So basically, things are going to trade, and they normally trade within ranges, stocks, bonds, anything you can think about. Think of even a basketball score. Usually the basketball team, they'll score between 110 points a game and 80. So during that game, they're going to be in there somewhere. They're probably not going to score 70, and they're not normally going to score 140. So they should trade in this range. Basically, that's the same thing with this, okay? But there's other lines. This line here is a 25-day moving average. So it averages all these numbers, and this is the 25-day average chart or line. This is a 50-day, and this is a 100-day. Okay, look how these condensed right here. The 25 and the 50-day actually are just merged together. And that's what we're seeing right in here. So we're seeing a lot of consolidation, and they're basically starting to really stabilize. So look over the last couple weeks. Mortgage rates are just steadily staying right in here. I foresee that right now. The Fed is doing a fantastic job. What they're doing is they're coming in and they're buying up enough mortgage-backed security bonds on a daily basis to basically make the market stable. We love stability. What happened today is there's two parties or multiple parties buying mortgage-backed securities. It's the Fed, and then there's institutions and individual investors. The Fed is pumping in $5 to $7 trillion a day into this market to stabilize it. Okay, the other parts of that is being purchased or sold by institutional investors. Individual investors probably make up a small, minuscule percentage of what this buying is. So the Fed kind of knows where they need to be to stabilize the market. However, when the stock market really rallies, like it did today, it was up 1.1%, over 300 points. It causes institutions to not invest in the mortgage-backed securities market, thus decreasing demand. Okay, so that's basically what's happened today. So I don't expect this to be a shocker. I'm not locking anybody. I'm basically falling on the sidelines, saying, that we're at stability right now, which is good. I'm going to go through the economic calendar here in a second, and I'll show you some news that's coming out this week, but I don't really think it's going to affect anything unless the Fed comes out and just kind of throws a shockwave through the system. So today we saw a couple different things. The stock market was up 327 points. The S&P was up 42. Awesome. Here's where the data comes in and says, there's fewer homes right now on the market than there were last year at this time. Over 20% fewer. That's a big move. All right. Next thing, the economic calendar. You're going to see this right here. Basically, the thing we're going to watch right here is the federal interest rate decision. The Federal Reserve is going to come out and tell us what they've spoke about all week and if they're going to do anything with the federal funds rate. There is nobody that's anticipating them to do anything. But what we want to watch for is their language. What are they talking about? Do they like the inflation levels where we are now? Are they concerned? Do they have any, what's in their heads? We need to know that to figure out what they're going to do. But I don't think anything through here is going to shock us. All right, so that's that in a nutshell. Here's things I just wanted to show you what I get on a daily basis. I spend thousands and thousands of dollars a year monitoring all kind of stuff behind the scenes. This is just one particular report I get on a daily basis that I review, especially before I speak with you guys, just to kind of see, is there anything in here that just basically completely stands out of the normal? The first page here gives me what's going on with market rate indexes. And on Tuesdays, I do a report or I do a review on where my rates are versus every company I can find online. Not every company, we'd be here all day, but I usually pull out 5-6 different companies and compare my rates to theirs. This is a general vision of what's out there right now. So for example, the 30-year conforming loan, and there's a bunch of variables to this, as you guys know that watch my channel. If you don't know, there's probably 6 to 10 different components that goes into your mortgage rate, and I'll do another video on that. But right now, the average 30-year conforming rate, there's going to be higher and there's going to be lower, is 2.92. That's 1.01 difference than where we were on Friday. We're up 2 basis points, so 0.02 than where we were last week at this time. We are 75 basis points, meaning 0.75% lower than where we were last year at this time. So if you bought a house last year, refinanced last year, you can most likely get a rate at least probably between 0.5 and 1 full percent lower than you have now. Okay, and that goes through the rest of these things. FHAs, they're almost down. They're down 88 basis points, meaning 0.88 in the rate. So you can probably get a rate that's darn close to 1% lower than you did last year at this time. So if you bought or refinanced a year ago, maybe look at seeing where the numbers would look for you right now. So that's where we are there. The market right now, like I said, was up 327. There's a lot of components that. And the aftermarket trading is really good. A couple companies came out and blew out earnings. So we're going to see probably a move into tomorrow with prices going up again. We had that 5 to 10% correction that I anticipated. Now you're going to see people starting to jump back in the market because things cheapened up a little bit. And I didn't pull up the greed index today, but I'll let you know where we stand on the greed index tomorrow when I do my rate comparison sheets. And just so you know, here's where I got the information. I know it because I'm in the business, but FHFA, which is basically Fannie Mae and Freddie Mac, they came out and said they were going to charge anybody that refinances 50 basis points, so 0.5% of the loan amount. So take your loan amount times 0.5%. That's what the fee is going to be, no matter who you go to. And that is going to be effective December 1st. Now, a lot of people don't realize this, and you have a ton of mortgage advisors, I'll say loan officers. Mortgage advisors should stay up on this information. You have a lot of people that don't realize there's exceptions to this rule. One exception is loans under $125,000. We don't get a lot of them, but if you have that, you're exempt from this cost. Also, Fannie Mae and Freddie Mac have boutique programs. They're called Home Possible and Home Ready. Those also, if you qualify under those programs, those will be exempt from this fee as of today. That can change. So your mortgage advisor, a lot of loan officers just say, oh, here's today's rate and here's what I could do for you. But they don't look into why, what, where, when, and how. Why am I putting you into that program? What benefits is it to me? So I go through and I say, here's where you would fit. You fit on FHA loan, here's where your rates and fees and costs are. Here's what your conventional would be. I give you all the options. Then I always say, here's what I would personally do. And it's truly what I would personally do. I'm not here to steer you in a bad direction. Why would I? I've been doing this for 33 years. If I was wanting to jump into this and try to make as much money as I can for a year, I'd sit here and lie to you. But I've done this too long of a duration that I'm not here to deceive you. I'm giving you the facts. You decide. I hope you use me. But if you don't, I have a lot of people that are sending me what they call the loan estimates or fee sheets, so I can give you a quote. But that's it for today. So if you like what you see, all I ask you to do is do me a favor. Check me out on the web. Google Dan Frio, DANFRIO. I've been doing this a long time, and like I said, I'm here to help. And I started my YouTube channel a couple years ago. I've been doing it for 10 years, but I really got into it about 2 years ago. And because there is so much deceptive information out there. So what I ask people to do right now, if you're looking to buy or refinance, whatever, and you have a quote, let me look at that quote. And once you get put in an application, the lender needs to give you one of two things. They need to give you either a fee worksheet or a loan estimate. Either or, send it to me. And I'll write on red pen on it and send it back to you saying, here's what I can do. Sometimes I can't beat what you have. So I'll respond basically, God bless you. Take it, sign it, lock it in, move on, don't look back, and just be happy, move on. You did a great job. 99% of the time, I'll respond back with a better rate and or a better fees, or many, many, many times I win on both scenarios. So if you want my assistance, all I ask you to do is go to my website. It's therateupdate.com. Down here, we'll give you my phone number. If you want to reach out, please give me a call. The number is 844-775-LOAN. That's 844-775-5626. Or email me. My name is Dan Frio. It's DANFRIO. You can reach me at dfrio@preferredrate.com. If you want to get started, you haven't gotten a quote, but you're like, Dan, I like what you have to say. You've been doing this. You sound like you know what you're doing. You could fall back and look at probably 700 of my videos. I'm not just a flash in the pan. I do this for a living, and I do it all day, every day. if you can just hit here and start a rate quote or an application for to purchase a home. Do the same thing for here to refinance. Probably the best and most thorough way is to go up here and hit the apply now button and complete the application. I'll get an alert that an application has been put in the system. And if it's during office hours, I can promise you that somebody will be with you within probably half hour, 45 minutes at the most. And that's just how we do things. If it's on the weekends or late in the evenings, I'm Central Standard Time. So if you're out in the West Coast, Pacific Time, it might be 7 o'clock your time, but it's way late here. I promise you I'll get a hold of you first thing in the morning. You can hit the apply now button or click here and get a free rate quote. Any of these work, and I'd love to hear from you. So that being said, all I ask you to do, we need 200 subscribers by the end of the month to hit 10,000. I need you guys. I need you. So please subscribe, share, comment, do whatever you need to do. Tomorrow, remember, Rate Tuesday, I'm going to start the shirt giveaway. So I need you to comment and or leave a subscribe, click the bell, whatever. Every Friday, I'm going to cycle through that. I'll do it live. I got a streaming system. Friday at noon, I'll give the shirt giveaways, and that's going to start tomorrow is when I need you to click in, and Friday we're going to do the giveaways. So God bless. That's all I got for today. My finger's doing better. I had surgery on it the last week, so I apologize. I missed a couple days last week, but I'm back at it, loving what I do, and I can't wait to hear from you. So God bless. Have a great night. Talk to you soon, but please don't forget to give me a thumbs up, subscribe down below, and I'll see you tomorrow. Bye-bye.